Hi, good morning. So today I'm going to talk about the variable universal life. This is one type of insurance that we really need nowadays. So as we all know that there are different types of insurances depending on the need of the client. For example, we have health insurances, life insurance, and one of the famous that everybody talks about is the VUL, or the variable universal life. So when we talk about the variable universal life insurance, this is a type of insurance wherein there is a built-in savings, meaning to say it is a life insurance that pays off the insured person when he dies, or some sort of a part of what you're paying goes to the income earning financial instrument. So what does it mean? If you invest your money in insurance companies, usually it earns from 4 to 10 or 12% per annum. While you compare it to if you save it in bank, so usually it only earns less than or 1% per annum. And at the same time, if it's if your money is in the insurance company, you earn more, and at the same time you are insured. So this is an example of the variable universal life compared to bank. So in this illustration, so both invested at age 30 with an amount of 5,000 per month for 10 years. So this is a long term. So Bobby the projected money of Bobby at the age 65 with 1% annual return. So the money will earn for only 772,612.78, while Vincent put his money on variable universal life. So at age 65, so his 5,000 per month earns now for 6,059,589. So that's the difference between the banks. So it's like more than 5 million difference with the same amount. So that's why a lot of people are getting or putting their money on investments. The benefits of variable life insurance: it protects your income when something happens to you. It pays out a lump sum to your beneficiaries, and you get the benefit of the investment and it grows over time. The fund can be used for education, emergencies, retirement, and more. With this illustration, the benefit of the client is 700,000, meaning to say if the insured dies, so usually 100 or 150% of the benefit goes to the beneficiaries of the client. Same as well with the accidental death benefit, which is 700,000 or 150% of that. The total disability waiver, this means that, for example, if the person becomes disabled and he has balance on the premium, so all of the balance will be waived. The premium will be waived. So there's a lot of benefit in getting a VUL. So back to this illustration. So as you can see, the investment for this 34 years old client, she wants to put the 18,343.50 for investment, and for the insurance 1,167.88 will go to the accidental death benefit, and 4,074 pesos for the enhanced critical illness rider. So in VUL, there are different riders that you can choose. So you just have to add an amount for this coverage. So for example, hospital income benefit, so it is another rider. So in this illustration, the client wants the enhanced critical illness. So for the amount of 4,074, and if he is diagnosed with any of the 60 illnesses that is listed on his proposal, so automatically he get 200,000 pesos. So as I've said, this amount depends on the client. If he wants a higher benefit, then he has to pay a higher amount on the premium. So, the 358.49 is for the total disability waiver. So, the total of the investment and the insurance coverage for a year is 23,943.87. So, there is an installment options for the client. So, you can pay your premiums monthly, quarterly, semi-annual, or annual. So, depending on the client. For example, on your initial payment, you pay the semi-annual. So depending on the insurance company. So you can shift, or if you want to request for, like for example, the following payment you want to shift to quarterly. So you can do that. You can request. Or if you want to make an additional rider, you can also do that. I think in some insurance companies, you can request within the 6-month period. And aside from this, so as you can see, the investment is only 18,343 because that is the budget of my client. You can also make a top-up premium, meaning to say, this is just like a savings if you want to add an amount at any time that you want. Say the minimum that you can add for your investment is 5,000. So you just have to fill up a form and then you pay it, so that the 18,343 will have an additional. So when you check the fund value, it is much higher in time. So that how a VUL works. The basic of the variable universal life. It is also a long-term investment which you can put your money for 5 or 10 years and let your money grow. So for those who are asking when is the best time to invest, well, I think this is the time to invest. Talk to your financial advisors and invest, and you'll not regret it. Okay, so happy investing. God bless.